Ladies and gentlemen of the crypto space, we're live on a Wednesday, March 30th at 11:33 a.m. And as always, we're trying to figure out what to do. So we consider all of the information that is presented to us, all of this insanity that's thrown at us on social media. But let's break it down into very simple terms. We have all this emotion that's going on, what to buy, what to sell, and there's no answer. You can have the most bullish environment, and you'll have bears that are like, why, and presenting very legitimate reasons why it should stop going up. And then you have bulls and bearish environments that are like presenting reasons, legitimate reasons, why it should stop going down. So, what we've done over the last 2 years is assess macro conditions, and that gives us that additional information. We've assessed technicals, that gives us our additional information to hopefully give us a little bit more of a capacity to make a decision and how to structure the portfolio, whether we should be bearish, no matter if someone's presenting bullish arguments, or we should be bullish no matter if someone's presenting bearish arguments. In the end, you're going to have folks of all opinion on both sides of the camp in any market condition trying to, well, not necessarily directly trying you, but influencing you to think contrary to really what you want. In the end, I've said many a times, the most important thing is to be able to sleep at night. No idea where the hell the market's going to head. You have gut instinct, we have confluence that gives us a greater degree of conviction that we're doing the right thing rather than the wrong thing. But sleeping at night is certainly the most important thing. So we got the loosest financial conditions in all of recent history. What does that even mean? So the Fed funds rate has been at zero. They bumped it up to a quarter percent. Oh, it's basically negative real rate. So the Fed funds minus inflation, it's still negative real rate. So it's basically on a real terms basis, like the Fed funds being minus whatever the hell, 0.25 minus the inflation number, the CPI number is. It's negative real rate. So what does that do? Why does negative rates push upward on risk assets? Because it pushes money out of bonds. If there's no reason to have capital parked in bonds. You have to outperform inflation. It pushes capital out of the bonds. So as the market tightens and there's more rates to be had, more rates in real terms to be had on debt, that is the safest place to park capital. You're going to get paid on your capital. Why? Because the government can actually print the cash in order to service the debt. So it's basically the risk-free trade, as everyone in financial land calls it. So as the rates go up on those instruments, capital tends to go over there in real terms. So it's still negative real rates in countless regards. So rates have been going up. We keep an eye on the bond market to see if there's any trend directionality shifts that would carry over into risk assets. If there's a big directionality shift, and it's also complicated because if the bond market, if bonds are buying excessively, that it could indicate risk off, where actors are piling in to sovereign debt because they fear a deflationary event in risk assets. So there's all these co- counter arguments that are made time and time again when looking over these charts of macro assets. And ultimately, what we're trying to do is assess directionality of capital flow. Is capital flowing to risk assets, or is capital flowing to risk-free assets? Is capital flowing from various fiat markets, from Japan over to the US? Obviously, their currency just got hammered as they stepped in for yield curve control in the bond market. So that's an argument. I'm actually jumping around a little bit, but that's an argument that I think is interesting. That as more and more sovereigns step into their bond market to save the bond market, sacrificing their currency, that gives the U.S. some breathing room because that drives dollar bullishness. They don't want the dollar to get too strong, but as that also gives breathing room for the U.S. government to issue more debt, which weakens the dollar. So they'll eventually have to systematically weaken the dollar in order to be able to service U.S. debt obligations, but also not to completely annihilate foreign fiat. So it's just strange right now I'm imagining um, how I perceive this global system. You know, it's like it's like pressure systems. It's like water, dynamic water systems, and capital is flowing back and forth, and you have pressures going all over the place. Um, and there's plenty of models that could probably be done for like fluid dynamics from a physics perspective of how to model capital flow. I'm sure physicists have a field day when they play around with financial markets. But we don't have that luxury. We have to tell a story. We have to help folks make better decisions from a high level and not get too detailed with trying to get too fine grained and analyze markets in too much of a complex fashion. We keep it high level, I guess. I could try. So what are we looking at? We got Ethereum up on the board, smacked into the 200 SMA, put in barely any support in the 200 EMA on the daily. It's at the top of the Bollinger Band. Let's go into the 4 hour. So it's finding support on the midline of the Bollinger Band, which is very interesting. You go over to Bitcoin, you have the same thing. Support on the Bollinger Band with a wild Dragonfly Doji on the 4 hour. Support on the midline of the Bollinger Band, below the TWAP, below the 50, below the 10 SMA. So there's breathing room between where we are and the top of the Bollinger Band, which is interesting. It'll take us up to 48,900, which would be a fresh higher high. Now we'll see what happens. Um, Anyone who tells you that they know market directionality, that's just silly. Oh, the market is guaranteed to go up from here. You have to find your own conviction. You have to find your own methodology for balancing a portfolio. Do you deploy capital? Do you not? Do you want to be protective? Do you have stables? Over what time horizon are you deployed to an LP position? Do you have impermanent loss exposure? There's plenty of ways to not have impermanent loss exposure in the current market outside of even the scope of Bancorp, which is a whole other story. Um, so my gut wants me to have exposure to Ethereum versus Bitcoin. And I'm certainly not a Bitcoin maxi. I appreciate the Bitcoin narrative and I understand its role in macro financial systems and why large market actors and billionaires like Michael Saylor are quite interested in it. They have just very, very long time horizons. It's not a great asset. Neither is Ethereum for small market actors, coming in with $5,000, $10,000. So you're not going to get significant multiples. If you get, 4, 5, 6, 10x on $10,000, it makes a big difference. You turn 10 grand potentially into six figures. But that doesn't change lives. That's store of value. That's great. But the problem there is wages aren't outperforming inflation, so your store value is appreciating, but it's not what everyone's here for. And a lot of what I like to think about is why the hell everyone's here. And everyone's here for that significant outperformance. And that's kind of the way I've structured communicating with you guys. That's why I always say 1% to 10% changes everything. The smaller positions are the ones that you want to outperform, whereas larger allocations of the portfolio want to be to the assets that are least likely to outperform because you need a larger allocation to it for it to keep up with the smaller positions that are likely to outperform more. And the reason I say that is a bit contrarian. Um, because I encourage folks to focus on the portfolio construction rather than outperformance. The second you try and start to make money, you're heading in the wrong direction. So instead, the contrarian says to focus on the structure of the portfolio, and a healthy portfolio is respecting the portfolio. And if you respect the portfolio will respect you. So if you want a portfolio to stay balanced, where you expect something to go 10x, that's a massive amount uh, uh, of returns. Um, that'll be a smaller part of the portfolio rather than a majority of persons without a robust way of structuring a portfolio, newer persons would be like, oh my God, this thing's going to go 10x. I'm going to go all in on it. So there's a risk profile associated with that. What happens if it doesn't go 10x? But let's say you're neglecting the risk profile for a second. I'm kind of hijacking this stream for uh, portfolio management, but it's okay. Um, you want if something's going to go 10x, you want it to be, 1, 2, 3, 4, 5% of the portfolio because you need a fair amount more capital in the larger assets to balance the portfolio to get those kinds of returns because you're not going to get 1, 2, 3, 4, 5, 6, 10x on Ethereum and Bitcoin in the short term. You might get 25, 30, 40, 50%. So for that larger position to generate the returns of the smaller position, considering best case scenario, you need more capital in the larger position. 25% on a Bitcoin might be 3, 4, 5, 600% on a 1, 2, 3, 4, 5% position in the portfolio. And that way you're keeping the portfolio balanced. And if you respect the portfolio and the portfolio is balanced, the portfolio will respect you. Because if you have risk consideration for the more volatile, smaller part of the portfolio, what happens if it doesn't go up? What happens if the narrative is invalidated? So the assets you expect to outperform the most should be the smaller components of the portfolio. Anyway, so I'm liking what I'm seeing with the Bitcoin and Ethereum chart, contrary to my macro observations. And the reason peering through the madness on macro, well, the thing that I notice the most, peering through the madness of the macro observations that we have, is negative real rates that are extremely, extremely negative. And it's some of the loosest financial conditions in recent history. And they can't raise the rates. If they raise the rates, we enter territory where historically it causes convulsions in the system, according to historic moving averages and trends. It's the catch 22. So, the question becomes historically, like the 2 year just hit yields of where we've had financial crises, and you have all this inversion of yield curves, which is just extraordinary to see. But none of that stuff occurred with such strong negative real rates. So you have all these recession indicators firing off, and you always have the historic bet of is it different this time? And that's like if the 10 year rips above 2.9%, which would break the historic trend. Is there regime change in the cards? There's no answers to any of this shit. Nobody knows, but that's why we tell stories, and that's why we talk about this stuff too. Because I guarantee you, whether you agree with the things I say or not, you're thinking these types of things. You're thinking, what do I do? What information do I look at to try and assess what decisions I should make? So, we're basically here just shooting the shit, talking about this stuff, thinking about things that probably most people don't think about. A couple of folks in the stream. Let's give some shout outs. Dan, James, Eran, Liv W's in the house. Everything's good. Mark Purdy, Risky Crypto, Barry DGB, Andrew, Killis, Breakfast Sandwich and Coffee with Noah. Oh, I got to get something to eat. Speaking of breakfast sandwiches, I'm not familiar with Silo Finance, Liv. Mike is not stable. My internet connection is not stable, my friend. You see Lafa's announcement. Yes, I did. Who cares? Thank you very much, Lafa, for doing something. We'll see what it does. I have very little interest in that project and right now at all. So I have that position I took. It is what it is. I cut off a piece of the portfolio for solidly 0x Dow, and it is what it is. I don't really look at it. I did my vote over to Day USDC. Great, groovy, grand. If the protocol stabilizes and bribes actually create some sort of appreciated pressure on solid, thank God, because there's literally nothing bullish about the situation right now. Basically, deploying capital to it's the most bearish of scenarios for the directionality of the price action, considering the tokenomics. There's nothing. There's no capital pressure. There's no pressure pushing capital into the market. It's all just exit liquidity, exit liquidity. So I'm very happy to see that he's working on it. Vasco, hey, no, any opinion on Silo? I do not know about it. BTC backed stablecoin and Citadel seem cool. Yeah, So BTC-backed stables is obviously UST, and Citadel is a big deal. I've talked about Citadel. I look forward to seeing what it does for the Badger ecosystem. It's going to be a big treasury builder. It's going to drive a lot of capital in, just like all the other DAOs have done. And I think Citadel tokenomics is quite interesting. Do I carve out a piece for it? We'll see. I don't. I'm not too eager to carve out capital in this market, especially to take excessive risks. I'm okay with volatility, but I'm not okay necessarily diversifying excessively, especially into new protocols, new projects. The big one that's catching my fancy is Catalog. Obviously, an extension of the Ren team. We'll be consuming Keeper DAOs. Keep It Out software, which is really cool, and Bancor V3. I'm very excited about those two protocols. Maybe even a little bit more than Citadel, but Citadel is a DAO. We know what happens with DAOs, and I think they're going to grow one heck of a Bitcoin treasury, which is really cool. And I'm quite curious speculatively what it does to the Badger price, considering they need to accumulate a large amount of Badger on in the treasury in order to optimize emissions for Citadel participants and Citadel Treasury Management. So that's quite interesting what's playing out there. So probably the three protocols that catch my fancy right now, um, uh, you know, on the cutting edge, like on the risk curve protocols, Citadel, um, Catalog, and Bancor V3. Obviously, Stargate's there as well, but I don't think they have adequate tokenomics right now that catch my fancy. There is no tokenomics right now, but from a technology perspective, it's quite impressive. Catalog's going to have overtones of the functionality that Stargate offers, but Layer DAO, we'll see, because obviously Layer DAO is designed to be an API, which is crazy. Obviously, Catalog is designed to be more of a market. I don't think they've not had no mention of API type functionality, whereas Layer Zero really is just a cross-chain messaging protocol, and that's big. But a big narrative doesn't mean jack shit. People could deploy capital all they want to a narrative that the tokenomics and the monetary policy don't fit the bill. Taking excessive risk, if there's too much inflation, if there isn't enough deflationary pressure, if there isn't enough capital controls to disrupt circulating supply, you're taking big risks. The only way inflation is accommodated with regard to stable, if not bullish, price action is if adoption is greater than the inflation rate. And I don't bet on that any day. I won't take any risk on adoption being greater than the inflation rate any day. I don't like that scenario or that situation at all. Vasco, do you expect market crash soon because the 10-year bond chart? I don't expect market crash soon. Mostly what I talk about is observations, macro observations. There's a lot of bearish indicators going off in the market. The bullish indicator is that real rates are extremely negative. So, considering inflation, these are extremely loose financial conditions, and the Fed cannot get ahead of the negative real rates. They can't. There's no way they could raise federal funds to 3, 4, 5, 6, 7, 8, 9, 10, 12, 15%. They can't Volcker the market. It doesn't work like that with the amount of debt that's on the books. So what does that mean? Loose financial conditions, negative real rates prevail. So that could be a very big thing to peer through the madness and see. That's the bullish that's the bullish sentiment right now in the markets, that it's loose financial conditions. No matter that the market is tightening, sure, the market is tightening, the rates are going up, but there's still extremely negative real rates considering inflation, and that's real. So there's plenty of reasons to be bullish or bearish. Bearish, like, oh, the wheels could fall off. The wheels could fall off at any time. It depends how you kind of, Raul talked about this, how you want to live your life. And he said recently, paraphrasing, of course, that he doesn't want to live doom and gloom. The system could fall apart, and I like that sentiment, and I'm kind of aligning with it more and more as I think about it. Um, What's the point of thinking everything's going to fall apart? Be a little bit optimistic and see what's going on. See the profound technology. See how extraordinary it is. The the network effect and all the social interaction, all this activity that is being generated because of the software. You really, what you're talking about is work and productivity and things being created. It's not traditional things like commodities, consumer staples, but this is technology and this is products and services that drive human interaction, and that's business, and that's a society. This is just a directional evolution of where things are heading. All of this stuff is significantly affecting human behavior. Still need farmers, but you need business and enterprise to keep people active. Activity, business maintains social order, drives economic activity. It's not all consumer staples. You need that as well. And so to have a functional and stable and robust financial system, you need all of the components. Volume is indeed kind of low. It is what it is. Look at this Bitcoin. Look at that damn candle. That 4 hour candle is crazy. You don't see dragonfly dojis often. That's so not a hammer. And you kind of got it as well on Ethereum. That's such a dragonfly. If I've ever seen one as a damn dragonfly. So it's really cool. Right below the TWAP on the 4 hour, 5 minutes left. Let's see if it closes below the TWAP, but it bounced off the midline of the Bollinger Bands. It's still well above all guppies. You go out to the daily, obviously, you're still in, very much above TWAP region. You're way above guppies. Guppies are gray. I mean, that's quite a nice sign. Coming off red guppies, going into gray. Clearly, you got to go through from red to gray to get to green. So we'll see what happens. Maybe you get a green guppy associated with a breakout of the 200 SMA. That'd be refreshing to see. Um, what's your take on the tox? I got a large collection of the tox, Danny. I don't know. NFTs are what they are. I've never sold NFTs. I have a large collection of NFTs. I've never actively tried to sell any of them. I don't care. Like I bought every NFT I bought just because I just wanted it. I didn't really think about reselling it. I just thought about the price and if I was willing to spend it, which is a fascinating thing because you talk to someone that's outside the crypto space and spending like zero point 0.3 Ethereum or a half an Ethereum on an NFT, a picture, it drives them freaking mad. But these capital markets and the quantity of capital and the amount of capital that's flowing, it's like, all right, that's what I bought. That's the price. I'm not expecting to get it back at all, but I wanted that. I wanted to get it, an NFT, so someone else didn't have it. This NFT had these characteristics, these traits, and I chose to buy it so someone else couldn't have it. And whether that turns into something, I have no idea. There's so many folks that are so damn bullish on the NFT space. I don't really think about it at all from a resale bullishness capital gains perspective. I just bought the damn NFT because I wanted the NFT because I didn't want someone else to have it. So I got a large collection of I might actually be the largest holder of Tox. Like I just have here. Where is this thing? It's really cool. I like them. I have just a lot of NFTs at this point. What does it mean? I don't know. It's just a large collection of Tox. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 24, 36, 40, 46 talks. And they're all the rare ones. They got these crown guys and these gold suits and these smoking jackets and these Ghostbusters and these spacemen. I mean, these things are really cool. I have one Superman, a couple of turtles, devil horns. Anyway, so that's just the kid in me playing around. Ian the Zombie, hey, Booster, Cap is Salo done. Salo was done a long time ago. I wouldn't. I have no interest in it. If Deuce and Xerox Dow manage to salvage it, great, groovy, grand. It's just something that's not even remotely interesting right about now. They messed it up so bad. About to get an empanada. I want an empanada. Throw the cap in empanada. Seems like a big catalyst for positive price action. BTC buys. Yeah, we'll see. We'll see. Um, Lewis, I'm late. Sorry for the question. Is Ethereum coming off the bottom when better price action and volume than ever before, in your opinion? No, I don't see significant volume. But it's nice price action. It'll be nice to see if it breaches the 200 SMA. It's well above the TWAP on the daily. RSI is overbought and coming back down. But there's a lot of breathing room on the weekly. So maybe check back next week. I mean, that's kind of the way you have to do long-term capital allocation. You're way above the guppies. So if you look at this, actually, it's quite stark. It's been green guppies. It's never gone bearish. It's you got compression of guppies. It's kind of like the start of this downtrend back in 18. But so I that's one observation I had. If you see back in 18, the push above the 10 SMA on the weekly and the guppies happened here and it peaked. But look, check this out. Look at the midline of the Bollinger Band. So notice back in 18 on the weekly, we got stopped out by the midline of the Bollinger Band on the bearish leg, and then the attempt to reprice to the upside. So let's see where we are now. It's actually the exact same situation. So this would be quite interesting, all things considered. Actually, this is a big deal, guys. So do you see that? Do you see that? That's kind of crazy. So we had our all-time high back in 17. You had your bearish leg, and then you had your run above the weekly TWAP and the 10 SMA, and it got stopped out by the midline of the Bollinger Band. That's kind of really. So we're right here, right now. So in 4 days, if this breaches the midline of the Bollinger Band, we're literally in the exact same situation as 2018 on the retest back to the upside. That's really strange. I got to tweet about that one. That's quite strange. So I would love to see this close above the midline, this orange line of the Bollinger Bands, and maybe turn and fall down and turn it into support, a breakout, the resistance flip support, and then a fresh higher high. If we see a push towards the top of the Bollinger Bands, that'd be nice to see. Top of the Bollinger Bands will take us close to previous all-time high at that point. And the top of the Bollinger Bands would also more or less, if a close at the top of the Bollinger Bands, would more or less invalidate a head and shoulders type structure. Kind of a strange head and shoulders type structure, considering this large wick. Down here would have been a little bit more well structured. Pat, any interest in putting a bit of RPLP in Aladdin? No, I'm not touching Aladdin. I do have convex right now. I took out a rocket pool RF, the WSTF LP position. That's my choice, and I don't. Well, we'll see in hindsight whether it's good or bad. But that was the position I opted for at this time. I wanted full ETH exposure. I mean, the narrative of this midline of the Bollinger Band retest on the weekly as compared to 2018 is that we're heading into the merge, which is a 90% reduction in emissions and pretty much hypothetical but expected minus 2.3% inflation rate per year, a deflationary macro asset. That's quite extraordinary. Folks often talk about Ethereum being fixed supply. No, it's an inflationary asset. It's a disinflationary asset on a 4-year periodic cycle, and it does have a fixed supply, but every second of every day, there's more and more Bitcoin in circulation. But that's the thing about Ethereum. It will become deflationary, which means more will be burned than will be minted. So every second of every day, there's less in circulating supply. That's really strange from a from a real perspective. Like it's going to be deflationary. That's crazy. So there's a lot of narrative going on, and I tell you guys all the time, you can't allocate capital on narrative. You need the confluence. You need all these thought processes. You need to assess bullishness and bearishness, and it'll drive you mad. I'm not saying that it won't do that. This shit's going to drive you nuts, but it's important to not. Oh, this is so bullish. Dollar is gonna die, and you buy Bitcoin. All you gotta do is buy Bitcoin. You gotta be more deep than that. You gotta be more thoughtful than that. You gotta really dig in and own this shit because now it's dinner table investing. Because, oh, I bought Bitcoin because the dollar is trash. That's not dinner table investing. You got to tell a story. If you can't tell a crazy story why you're doing what you're doing, that's what I always like to remind folks. Do Kwon only bought 1.5 billion of BTC. He wants 10 bill. Yeah, I really like the Terra, the Luna, and and Bitcoin narrative that he's putting out. I mean, we got the whole Bitcoin community like rallying around UST, so that's quite interesting. There's a lot of synergistic narratives going on right now. Doesn't mean allocate capital according to a narrative, but there is indeed a lot of synergy going on with the narratives. I mean, you got Ethereum merge, you got a Bitcoin-backed stablecoin. What the heck? So that's literally catching the fancy of the Bitcoin folks. So that's quite interesting. The Ronin Bridge exploit was something that's extraordinary. That was extraordinary. That's why Stargate and that's why catalog finance are big deals because they don't have the liquidity pools like multi-chain, which was a big narrative we talked about. But I've lost interest. Um, I'm neither bullish nor bearish, Vasco, on Stargate. I appreciate it as a technology that is cross chain messaging that changes everything. And there's only two potential cross chain messaging protocols. That's, catalog finance, but that they're focusing more on an exchange experience, whereas Layer Zero has Stargate, which is their cross chain swapping implementation using Layer Zero, but Layer Zero is much more than swapping, it's cross chain messaging. That's a big deal. So I am quite excited about the technological potential of their software. That's the best way to say what I'm interested in. I have a bond that's due to me for Stargate. Do I not have Stargate? So I have a bond that's due to me. The auction in 1 day, 23 hours. I'll be able to buy 18,000 Stargate for 25 cents. Yay! So I got a little something right there. Oh, time remaining. Oh, I gotta buy this. No, is it not time remaining? Buy Stargate price. When do I get to buy it? Oh, I don't have any USDC. I gotta buy it right now. I got a day left. Woo! I gotta buy it. I gotta do that. Um, have you heard of Silo? I have not. Yield curve inversions will not cause a recession and market crash immediately. True. And I'm not a fan of folks that say yield curve inversions cause market crash. That doesn't mean shit. Yield curve inversions are a story being told about market actors and their market activity. If the short end of the curve is being bought, the yields are flat compared to the long end. It means long end they're people are seeing risk in the market and they're not pricing future money greater than short-term money. So that's why they say when you have an inverted yield curve, short-term money is worth more than long-term money. It's an unhealthy market. You want future money to be worth more than short-term money, and that's the way debt markets work with regard to historic perspectives of looking at them. Any thoughts on Redacted? I look forward to them buying the shit out of my bags. No interested in their assets. I would like them to buy the crap out of Convex, which yay. I know I never got the chance to join a live video, but I catch up on YouTube each time you're on. Thanks for sharing. It's my pleasure, Connor. I hope it helps. I clearly have a very different perspective as compared to the vast majority of YouTube persons. Have you bought SDG Pizza Shop? Yeah, we're looking at it right now, Sheetsa. I got a bit of a position that I'll take. Love the talks. Love your take on NFTs. Danny, my man. Paul, anyone going to claim the Valez airdrop from Blizz Geist holders? Not on my radar. Um, Alex, yes, indeed. The auction is live. I'm going to take care of that. 12:08 p.m. on a Wednesday, March 30th. I missed Monday, but it's good to catch you guys on a Wednesday nonetheless. I'll be back Friday. You guys know the deal. It is what it is. I wish you guys a safe week. Remain rational. Stop by Discord. You get up the free channel, the paid channel, the after party on Discord. You know the deal. For the most rational community in the entire crypto space, check the Twitter profile if you need any one-on-one assistance. All the links are there. That's the deal. I'll see you guys on Friday. Let's see how the rest of the week goes. I wish everyone the best. I will see you then. Peace.